Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, and make sure to check the timestamps as I write same, updated or new, so that you know what's different compared to the previous video, where in this scenario, the low time frame bullish scenario, we are looking for a finished triangle in a higher degree wave 4, and now we're looking for a bigger wave 5 to the upside. The problem in this scenario, however, is the end. It is this wave E to the downside, as on the lower time frames, this wave E looks very much like a double zigzag, A, B, C, and then a W, correction in an X, and another three-wave ABC to the downside, leading to a bigger WXY, double zigzag. And that is not what you like to see in a wave E. If you have a double zigzag in a triangle, by far most commonly it's a wave C or a wave D structure. And if wave E is more complex, which already is rare in a triangle, it is most commonly a lower degree triangle itself. So a double zigzag here is not what you like to see and lowers the probabilities of this particular scenario. Now, if we look at this then being a double zigzag, there's a couple of structures that can include a double zigzag, and that is a wave A, B, X, or a wave Y. But I like to start with the A scenario, because if this move to the downside is a wave A, you have to immediately think about a flat structure. In this scenario, we then have a wave A double zigzag looking for a three-wave structure in B, and then a wave C to the downside, which then is an impulsive structure in a five-wave move where you're going to take the double bottom that you have over here. Now this wave B at the moment can have two different structures, either a zigzag ABC that is already finished, where we hit this 1 to 105 Fibonacci taken from the high to the low of A, which is a common target for a regular flat. Or we have to possibly look for a double zigzag, where we then have over here a W zigzag looking for an X, and then a wave Y to the upside, where your target for an expanding flat is between the 1.236 and the 1.38, which is between 38.3K and 38.6K, which also is in confluence with this yellow target box over here between 38.5 and 39K, after which we then expect an impulse to the downside. Now, an expanding flat is more common than a regular flat, so that is something we have to look out for. But what is important for a double zigzag is that this move to the downside, wave X and then a WXY, moves below this trend line, the trend line of this first structure to the upside, taken from the low of A to this first low. So this is also called an AB trend line. You have a wave A here, wave B and wave C, and then a W, and you want wave X to break this trend line. So preferably it moves to the 382 as a minimum, right? A minimum target for wave X in a double zigzag. The maximum target is the golden pocket, because if price moves lower than the golden pocket and hits the 07, it invalidates wave X of a double zigzag. We do have some support below price. If we look at the target boxes, you can see I have one white box and one blue box. Now the white box has been traded through, we push to the upside, but it's important to keep it on over here because it now can act as a support resistance flip for continuation to the upside. And the blue box down here is in confluence with that golden pocket, which is between 36.3 and 36.5K. If we then look at this move to the downside being a wave B, so a double zigzag in wave B, then we have to look for a flat in the other direction. So we have a wave A, wave B, which hit the 0.9, which is a target for a regular flat, the minimum target actually. And then we're looking for an impulse to the upside, 1, 2, 3, 4, and then eventually a wave 5. In this scenario, wave 2 retraced to the 382 to the 05 Fibonacci, which is not deep, right? That's a shallow target for a wave 2 because the 05 has not been hit, and the most common target for a wave 2 is the 0.5 to the 0.786. And the 382 is a little less common for a wave 2, but common for a wave B in a three-wave structure. Then we have a wave 3 to the upside. It is already finished. Also, this wave 3 is quite short. If you take a trend-based fib extension from the low to the high of this wave 1 to the low of this wave 2, and you can see that this wave 3 is just a little longer than the 1.236, and it is a lot shorter than the 1.618, which usually is a minimum target for a wave 3. However, it's not invalidated because simply a wave 3 is not allowed to be the shortest wave in an impulsive structure, and this wave 3 is longer than wave 1, which makes it a valid impulsive structure in a wave 3. Then over here, We are looking for a wave 4 in a 3-wave corrective structure to the downside, where a common target for a wave 4 is the 302 to the 05 Fibonacci, with the invalidation here being the 0.618, sitting at 36.8k. You want to find support in this area, and then you want to see continuation to the upside, where then we're going to be looking for a wave 5. Now, if you look at the green wave C, the target for this wave C is between the 1 and the 1.236, which is between 37.9k and 38.4k. And if this is possibly the low of a wave 4, you can take a fib from the high of 3 to the low that we have just made, toggle on the wave 5 target area, and then you can see the 1.236 and the 1.618 on my chart. And this is then the target area for wave 5, which is between 38k and 38.3k. If we then finally look at this scenario being a wave X to the downside over here, which is currently the lowest probability scenario of the 3, then we're looking at a WX and then a wave Y, which has to be a flat or a triangle. Now, for this to be a triangle, this has to be an ABC. And you're now looking for a move to the downside, preferably also an ABC. But if this is your A, and this is, has to be your C. This is quite a short A and so far a short C, right? So you definitely need price to move to the downside a lot deeper. And for a flat, you're going to be looking for this to be a 3-wave A, then a B, and then a wave C. And it's very, very early to call. Of course, I also mentioned that this can be a wave Y, which then ends the structure. The reason I don't have a folder yet is because if this is the end of a wave Y, we first have to know if this becomes a 5-wave or a 3-wave structure before we start continuing counting this. So that's why on the chart I don't have a folder for wave Y. Now, if we go to the micro time frame, we go to the 5-minute over here. Let's start on the 15 first. Then over here we are looking for a potential ABC to the downside, but as you can see, actually while recording, price hit the 0.618, invalidating a 5-wave move to the downside here. That's interesting. But in a wave 4, right, for the bullish scenario, 1, 2, 3, 4, 5, you're looking for a 3-wave structure, WXY or an ABC. Both of these works. Now for an ABC, preferably price retraced to the wave C target area here, where you also had some support, the top of this gap, right? But in this scenario, if we're looking for a wave C, you want to see an impulse to the downside, 1, 2, and then a 3, 4, 5. The invalidation for a wave 4 is if price hits the 0.618, taken from the high of 2 to the low of this wave 3. So therefore, this ABC becomes less likely, and either you have a potential WXY double zigzag over here that is now finished, right? Because this is then the low. You grab the liquidity that we expected in the morning video, right? We wick the lows over here, bounce on the 886, and you move to the upside, has a higher probability of being a C or a Y, which then increases probabilities you come back later to take the lows. Now that happened, right? So we could have a finished corrective structure where now we could be looking for price to move to the upside. Of course, we are looking for proof of support. So preferably you see a market structure change, volume, order flow, RSI, whatever you use, CVD divergences to increase the probabilities of your potential trade based on, entry requirements that you have. Now over here we had the daily acting as resistance. We missed out just by a few dollars, but one can argue it has been hit. In my opinion, if we go up once more, probabilities are high. You're going to take the double top at 38k. If we look at the divergences, we had bearish CVD divergences over here, which was actually quite nice because the bearish divergences came on the chart when we also tested this order block over here, so some additional confluence. This has now played out as price took these lows, and the only divergence that is remaining is basically between this low and the higher low, which is a bullish CVD divergence, where the target is then this high, which in my opinion then also leads to the double top that we have at 38k. So if we then look at the probabilities of the different scenarios, then currently based on this structure, right, a triangle that is finished has a lower probability at the moment compared to A or B. So for A or B, I am generally looking for the double top to be taken, because in both scenarios, you're going to take the double top at 38k. So in this scenario, you're either doing that in a WXY, or in this scenario, you're doing this as an ABC, and then you get a retracement. So please pay attention, right? If we reach the double top, be aware of a potential swing failure pattern, right? If you get strong continuation, no problem. But if you wick the high, close below and then start to move impulsively to the downside, then this can definitely be a temporary high and we can get a bit of a retracement to the downside, right? So this is something to definitely keep in mind, but both of these scenarios have currently a higher probability, but generally it means taking the double top, either a bit of a bigger retracement or just moving up now in a 5-wave structure. And on the micro, the bullish scenario has a higher probability, which basically meant we were looking for a 3-wave structure, WXY or ABC, for then a move to the upside, where the invalidation would have been down here, 36.8K, right, for also the bullish scenario, which is over here. But yeah, we don't really have to think about an ABC at the moment because that has been invalidated. So let's see what price is doing locally. But of course, in a bullish scenario, the invalidation would be here for a wave 4. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.